You ever have one of those moments? You've got the perfect trade idea, everything looks right, but your timing is just, completely off. Well, today we're going to dive into something called fractal timeframes. It's a seriously powerful way to get almost military-grade precision on your entries, and it's all about looking at the market in a totally new light.
Okay, so let's start with a question I know every single trader has screamed at their screen. You do all the work, you find that A-plus setup, you pull the trigger, and bam, the trade immediately turns against you. It is maddening, right? But here's a thought. What if the problem isn't your idea? What if it's the chart you're looking at?
And that, right there, is the classic trader's dilemma. That constant, endless search for a reliable edge. But here's the thing. The secret isn't some magic indicator. No, it's about having a real system for how you look at the market. Kind of like having different zoom lenses for your analysis.
So, what's the solution? Well, it all boils down to one fundamental principle, multi-time frame analysis. Seriously, before you even think about the nitty-gritty of an entry, you absolutely positively have to understand the bigger picture. But we can take that idea and really build on it. This isn't just about, randomly clicking between the 1 hour and the daily chart. It's about using a dedicated system. And that system, well, it comes from seeing the market as something called a fractal. So what on earth is a fractal? It sounds complicated, but it's not. Just think about a coastline on a map, or a snowflake, or even the branches on a tree. It's a pattern from nature that just repeats itself at different scales. The closer you zoom in, the more you see these smaller, identical versions of the big overall shape. And here is the mind-blowing part. This law of nature applies directly to financial markets. Price movements are fractal. You know that classic head and shoulders pattern you see on a weekly chart? Well, a smaller version of that exact same pattern is probably forming on the 1 hour chart right now, and an even tinier one on the 1 minute chart. They are all connected.
Okay, that's cool, but how do we actually trade this, right? How do we make this whole fractal idea actionable? Well, we do it with a simple system based on 3 key timeframes. This is where all that theory turns into a real practical trading plan.
Here's the process. It's simple. First, you start way up high on what we call your structure timeframe. Think weekly or maybe daily charts. You're looking for a huge, obvious support or resistance level. Then, you zoom in one level to your pattern frame. Here, you're just observing how the price is behaving as it gets near your big level. And finally, for the kill shot, you zoom in one more time to your trigger frame. This is where you find your super precise entry. So let's put some real numbers on that. If your big picture structure is the weekly chart, then your pattern frame is the daily, and your entry trigger is the 4 hour. Make sense? Or hey, maybe you're a shorter term trader. If your structure is the 4 hour chart, then you'd be looking for your trigger on the 15-minute chart. You see how it works? It's just a clean, logical cascade, zooming in each time. Okay, so why bother with all this? What's the big payoff? It's huge. You get these absolutely razor-sharp entries. And that kind of precision means you can use way, way smaller stop losses. And when your stops are smaller, your potential risk to reward just skyrockets. But honestly, the best part? It takes the guesswork out of it. It becomes this clear, repeatable process you can use on every single trade. But listen, finding that perfect entry, that's only half the battle. Now comes the really hard part, right? Managing the trade itself. And this is where we have to talk about aligning our expectations, not just for price, but for time too.
Okay, this is a concept that trips up almost everybody, so listen close. A trade doesn't just have a price target, it also has a time target. The classic mistake is using, say, a 5-minute chart for your entry, but then you're expecting a profit that should take a week to form, and you want it by the end of the day. It just doesn't work like that. Both your profit target and your time horizon, your patience, have to be based on that big picture, structure time frame. And just how long are we talking? Well, it can be pretty surprising. Let's say your main analysis, your structure, is on the daily chart. That means your entry trigger is on the 1 hour. You have to be prepared to hold that trade for at least a week. A week! And what if your structure is the weekly chart? Well, now our holding time is measured in months. This requires a huge shift in how you think. You need serious, serious patience. All right, this brings us to the final piece of the puzzle, and honestly, it might be the most important one of all. We're talking about truly mastering your entry. This is what separates the novices from the pros.
So we need to make a really important distinction here between 2 different kinds of being early. First, there's being early on price. That means chasing the market, jumping in before it even gets to your level. That is the unforgivable sin of trading. You just don't do it. But then there's being early on time. This one's way more subtle. This is when you nail the entry price perfectly, but then the market just sits there. It goes sideways for hours, maybe even days. Your capital is tied up, and it just drains your mental energy.
So what does a truly masterful entry look like? It all comes down to a single number, 1. A pro trader enters, and the market starts moving in their favor within one single candle on their trigger time frame. Think about that. No drawdown, no sitting around and waiting. That is the benchmark. That is the goal.
And so, that leaves us with one final question for you to really think about. Look at your own trading. Are your entries right on price, but totally wrong on time? Are you constantly finding yourself sitting in trades that just go absolutely nowhere for ages? Because mastering this element of time, well, that's the final key to unlocking true precision trading.